Hello, all Inderes TV listeners and viewers. Anora reported their Q3 this morning, and we have here the company's CEO Kirsi Puntila, CFO Stein Eriksen for interview. Hello.
Hi.
Hi.
Hey, Rauli.
So, Kirsi, let's start with the usual question. What were the highlights of Q3?
Yes, I guess the big thing of the quarter for us was the introduction of our turnaround program called Fit, Fix and Focus. That was coupled with the news that we had earlier in September about the launch of our ambition to look at the organization, adjust the organization. So we started the change negotiations. The scope of the negotiations is including 500 people. And as a result of that, the thinking is to cut 70 to 80 positions by the end of the year. So that, of course, is the big news. Then Fit and Fix part of this turnaround program is very much about simplicity and cutting costs and complexities and improving the profitability. And then the focus part, which is more about, okay, where do we believe as a company the growth is coming from in future, that we will then talk more about next week when we have the Capital Markets Day on Wednesday.
Yeah. And what about the Q3 numbers as such? What were the kind of positive and negatives there?
Yeah, the positives of the quarter if you look at the P&L side first, is of course, I mean, let's celebrate a little bit. I think we had a very strong comparable EBITDA, which improved by 13.1% to 18 million euros, which is 11.5% of net sales. So I think we're very, very proud of that. And that on top of the EBITDA, then very strong across profit, 43.9%. And then the overall very disciplined cost control. So those were the positives from the sort of a P&L point of view. Then if you look at the commercial landscape, one has to again recognize the improvements that we've made in the wine segment. So this was now the third quarter in a row that we improved the market share in our biggest wine market, which is Sweden. And in fact, we are the fastest growing company in the Swedish monopoly, and we have cemented our position as the number 2 player. So that's one thing for the wines. Then our national hero in Finland, Koskenkorva, again performed really well. I don't know if you've noticed, but we have launched some amazing innovations again this season. Gingerbread and Minttu Choco Vanilla, for example, for Koskenkorva. Then also other brands, we've launched Ålborg Röd and Jaloviina Cream, which is an incredible new cream liqueur. And then one can't forget, obviously, the season that we are now we've entered the glögg season. So we launched in Q3 Blossa Annual, which is where the theme now is Alps. And for the first time ever, it's a red wine-based glögg. And all the glöggs, so those were the sort of positives. Then the negatives, I think we have to be honest that the two single biggest challenges for us this year have been top line and then market share, especially in the spirits. But I choose to be positive there also, because even though we lost the top line by 3.7%. It's a bit less than in the past couple of quarters. So therefore, there's diminishing of the top line erosion, and in fact, majority, if not all of that, drivers are the filler business in wine, and then the earlier lost partners in the spirit segment. So that, and also the market shares, obviously the partner losses in the partner business are affecting the market share development in the spirits. But those are the sort of negatives.
Yeah, let's go a bit deeper into those. But maybe first for Stein, the comparison period for the markets as well as for you actually was already quite weak on the volume side, especially last year September. But still, the market declined also this year. So was that a surprise to you? Has the market been basically weaker than you have expected?
No, I think to be honest, if you look at what we thought in the beginning of the year, the market has been weaker than what we expected. And I think that also applies to Q3. But that being said, and I think also Kirsi mentioned it, what we do see is that now 3 of the 4 markets in Q3 had a less negative development. And in fact, actually the Norwegian market had slight volume growth. And also what we are happy with is that we managed to then turn or using other levers in order to increase profitability, mainly then improving gross margin and also have good OPEX control. And I think also worth mentioning of the positives in Q3 is actually the strong inventory reduction and also the good cash flow. So that contributed to that we ended up with 50 million in lower net debt. So also I think the balance sheet proved pretty strong in the quarter.
And I think one thing that we often forget in these reports is that we don't talk that much about the industrial, but even industrial, if you look at the Vectura, I think the efficiencies in Vectura were very, very impressive. So I think there are many positives in all of the segments.
Okay. And then on the segment specifically, you mentioned already the market shares development, but just to understand it a bit better on wines, well, in Sweden, was the gains kind of a continuation of what we saw in Q2, or have you kind of gained further share during the year?
We have gained further share, and also I mentioned there are a couple of new launches, and Il Capolavoro has also been expanded. So it's a continuous improvement for the wines.
Yeah. Okay.
And I think also in spirits, I think it's worth mentioning, and not to sound too positive, but if you look in Finland, I mean, Finland is our biggest market when it comes to spirits. We have some really strong market share, and if you look on our own portfolio, we actually gain market share in the quarter. And I think that's also a good sign that we are doing some progress in our most important market, driven especially by the new innovation, like you mentioned, Kirsi.
Yeah. So in spirits, the losses were mainly the partner deals, which
mainly the partner deals.
Yeah. And when did those actually happen? So how long we will still see the impact of that?
Yeah, I mean, end of last year and early this year is basically, if you look at the 2 biggest losses that we've had. So we should be then soon getting rid of that impact.
Okay. Then you mentioned already the cost cutting program you announced whatever a month ago. So 7 million cost savings. Can you at this point give any kind of color on where do you expect to get those savings?
I mean, we launched that. We get into the negotiations, and negotiations progressing as planned. And I think we are hoping to finalize them by the end of the year, so that as of early next year, we would have a new organization. But we will elaborate more on the details as to where and how next week.
Yeah, and will there be any, or probably there will be some one-off costs related to that, but I guess you haven't communicated yet anything.
Yeah, so we will probably have some one-off costs, but we still haven't made any provisions or accruals in our balance sheet because, like Kirsi said, we're still in the negotiations. Yes.
Yeah.
But we will probably see some one-offs in Q4.
Yeah. And then the market outlook, like you said, you have been expecting the market kind of to improve towards the end of the year, and I think you're wording of quite stable full year volumes in the market still points to that. So what's kind of your confidence and expectations, what will turn the market?
Yeah, when it comes to the guiding, I can say, I mean, we are still guiding between 70 and 75 million. And just also bear in mind that more than 40% of our EBITDA comes in Q4. We are extremely dependent, of course, of the good Blossa sales. Just to remind you that Blossa is our second biggest brand. And all of the sales, or basically 90% of the sales, comes in Q4. But that being said, we still, I think it's fair to say, Kirsi, and I think I also mentioned it in our last video meeting, that we had a strong Blossa plan, and we see also that materialize now into Q4, so strong Blossa plans. And then also we still have other levers to pull that I think we have shown now during the first 3 quarters. We still can use more or improve our gross margin, and also continue with the OPEX reductions. So I'm still confident that we will reach the guided level between 70 to 75. But even though if the market continues to be challenging, and also especially related to the fact that we are gaining quite a good market share now in Sweden, and also starts to stabilize the shares in Finland.
Yeah. Okay, good. And like you said, you have a CMD upcoming in a few days, so we will then hear more and also talk more with you about the kind of more long-term growth. So
Indeed.
yeah,
Yes.
let's come back then. Thank you.
Yes,
Thank
thank
you.
you.